I'm going to show you how to use a couple of online calculators that I've been using for years, and I think just help make you better educated when it comes time to buy a house. So what we're going to be looking at today is just the most simplest calculator online, and I'm taking you through a website that I have been using for years. It's crown.org. It is a Christian Ministries financial website and has just tons of great information. But what we're going to show you today is their calculators, and like I said, I'm just going to go to the most basic one. So if you're at crown.org, and this is the home page here, you're going to come up to the resources tab. They do update the website from time to time, so occasionally you'll have to find that again. But under resources, we come over here to personal finance, and you can see calculators. So we're going to click on calculators. And I'm going to tell you that there are some other really great calculators on here as well. I will go through a few others on separate videos, but I'm trying to keep this one just to one item on the video. So for today here, we're going to take a look here at the mortgage term comparison calculator. And I will add that if this website's not for you, you can go to Google, just type in mortgage calculator, and there are loads of them out there. I just happen to be partial to this website and some of the other calculators that they have as well. So let's start with what we're looking at here. The mortgage term comparison calculator is simply going to tell us what the monthly payments would be on a new mortgage. And of course, you have to also keep in mind that this is an estimate. It's not going to be, exact, but it is probably going to be fairly close. And I say that because if you have not talked to a lender yet, you don't know exactly what your annual interest rate is going to be. So we're going to start with the mortgage principal. Principal is the amount of money that you've taken out on the loan. So let's just, for example, let's say that there is a $300,000 house, and that's the one that you want to buy. Just because the house is $300,000 does not mean the $300,000 is the amount that you're going to take out on the loan. Not that everybody has 20% to put down. You can get loans with less. For today's example, we're going to use a 20% deposit, 20% money down. So if we have a $300,000 loan and we're putting 20% down, that means we're taking a loan for the remaining 80%. So we'll multiply that times 0.8. And so our loan's going to be for $240,000. So over here under mortgage principal, we're going to put in 240. And, if you're taking a loan out for 300, put it in for 300. If you're taking a loan out for 100, put in 100. We're going to come next to the annual interest rate, your APR. Now, this number, it changes, and you're not going to know exactly what it is until you've talked to a mortgage professional and gotten yourself pre-approved. I'm going to take you to my Facebook page just for a second. Just if you're new to this, you may have no idea where to begin as far as what the mortgage interest rates are right now. I happen to have a photo on my Facebook page, which you can find. It's facebook.com/joyofarizona.com. And on it, you can see the projected 2018 Q1 is 4.1. So we'll use 4.1 over here in the example. For myself, when I have used these calculators, I've always sort of used worst case scenario. If you're not putting 20% down and maybe your credit isn't perfect, you're probably not going to get the lowest interest rate, so you might get 4.5 instead. So just for today's example, let's use 4.5. So we're going to hit calculate here, and we can see we've got different numbers based on different number of years for the loan. So most people take out a 30-year loan, 30-year mortgage, and then the second most common would probably be a 15-year mortgage. And you can see the payments are more on a 15-year mortgage because you're paying it off quicker, 15 years quicker. But let me kind of talk you through that here. So the monthly payment on a $240,000 loan with a 4.5% interest rate would be $1,216.04 per month. Now, what that includes is it includes paying back the principal. So remember, the principal is how much you owe. That includes paying back the full $240,000, and that includes paying the interest on the principal. What this doesn't include, and you should add into, is it does not include your taxes. So when you buy a house, every house is going to have annual taxes. Most frequently, you will see those get paid on a monthly basis through escrow to your mortgage company, who will then pay the taxes. But sometimes not. Sometimes you pay that yourself, but you want to make sure that you're budgeting for that. So if your taxes are $2,000 a year, we'll just use that as an example, and you divide that by 12, you've got $166 a month. So you want to add your taxes in, and then I'm just going to add in another $100 in homeowners insurance. That number, again, can be very different depending on how much is the house worth that you're buying, what your deductibles are, what is the company that you're using to insure your house. So for this example, and like I said, this is all estimated, we're going to say it's about $267 a month in taxes and insurance. And we're going to add that here to the monthly payment of $1,216. So you're looking at just under a $1,500 a month payment for taking a loan out of $240,000. So let me take you through this a little bit more. You can see the total interest here. The benefit, you might have asked yourself, well, why would I want to pay $1,800 a month when I can pay $1,216 a month? The benefit is that you're going to pay less in interest over the course of the loan. So on this 30-year loan, you're paying $197,776.11. On the 15-year loan, you're paying $90,477.10. So you can see at the end of these two loans, you took out a mortgage for $240,000, assuming that you keep the house for this number of years and you make every payment without overpaying at all. So you're making every payment on time and exactly what they're asking for. A 30-year loan, that $240,000 that you borrowed, you're paying back a total of $437,776.11. On the 15-year loan, you're paying back a little less because you've had the loan for fewer years. And I'm going to take you through an amortization schedule on the next video because I actually think it's very interesting. But here you can see the total payments are $330,477.10. So you do save a little bit of money in the long run by taking out a shorter loan, but you're going to have higher monthly payments. So it really is, it's unique to everyone as far as how they want to do that. So I'm going to close out this video, but keep looking back. I'm going to post some other videos that will take you through other calculators from this website that I think can be very useful and helpful with your mortgage and your personal finances. Thanks so much for watching.